Welcome to this deep dive. We're digging into the latest earnings, and today we're focused on Cal-Maine Foods, ticker CON, specifically their first quarter fiscal 2026 results.
That's right. And this release, which dropped October 1st, 2025, was actually pretty significant beyond just the numbers.
Yeah, tell us about that. It wasn't just a standard report, was it?
No, not at all. This was actually the company's first ever live earnings conference call.
Wow, first ever.
First ever. It's a really key part of their new investor relations strategy. Seems like you're making a serious push for more visibility, maybe trying to change the narrative a bit with investors.
Okay, interesting context. So let's get straight into it because there seems to be this tension right off the bat. The headlines weren't exactly glowing.
No, they weren't. GAAP EPS came in at $4.12. Now, the consensus on the street was closer to $5.01. So, almost a dollar miss there.
Right, a decent miss. And revenue.
Revenue also missed, came in at $922.6 million, while consensus was looking for something around $960 million.
So, okay, misses on the top and bottom line against expectations. But then you had management.
Right, then management steps up and calls it the strongest first quarter in company history.
Which sounds completely contradictory. How can it be a record quarter and miss estimates by that much?
Well, that's the million-dollar question, isn't it? And I think the call really tried to unpack that. The argument seems to be that those consensus estimates, they were just too tied to the very unpredictable conventional egg market.
So the analysts got ahead of themselves on the commodity side.
Seems like it. But when you look at the actual business performance year over year, it was strong. Total revenue was up, 17.4% compared to last year?
Okay, that's a solid jump. And how did that flow through?
Really well, actually. Gross profit hit $311.3 million. And that drove a, frankly, very strong gross margin of 33.7%.
33.7%. That's pretty healthy, especially for a business with commodity exposure.
Exactly. It suggests more stability than you'd normally associate with calm, historically speaking.
And the cash flow. Sometimes that tells a different story.
Well, here it backs up the strength. Cash flow from operations CF ops was extremely robust. $278.6 million.
How does that compare?
It's a huge increase, up 137% year over year.
Wow. Okay, so they're generating serious cash.
Serious cash. And that's not just, padding the bank account. That cash is funding the strategic shift they kept talking about.
And speaking of cash, they returned some to shareholders too, right?
They did. The board declared a variable dividend. It came out to about $1.37 per share.
And that term variable is important here.
Very important. It's not a fixed payout. It moves with the company's performance, their cash flow, which can be volatile. So the fact they could pay out $1.37 this quarter really underlines the financial strength in this specific period.
Gotcha. So they're making money, generating cash. Let's talk about that strategic shift you mentioned. What are they doing with all this?
Right. So the big picture here is management is actively trying to pivot Cal-Maine, moving it away from being just, a pure commodity egg producer, totally subject to those wild swings, and turning it into more of a diversified, stable, egg-based foods company.
Like a consumer packaged goods company, a CPG.
Exactly. That's the goal, the CPG model.
Yeah.
And you can really see that starting to show up in the numbers they highlighted.
Okay, so where's the growth coming from then?
Two main engines they focused on. First, specialty eggs. That's your cage-free, organic, pasture-raised stuff. Sales there are $283.5 million.
And the growth rate?
Up 10.4% year over year. And importantly, these specialty eggs now make up about 36% of their total shell egg sales volume. So a significant chunk.
Okay, steady progress there. But you said two engines.
Yeah, the second one's where things get really interesting, prepared foods. This segment delivered $83.9 million in sales this quarter.
$84 million. How does that compare?
Okay, get this. That's an increase of over 800% year over year.
800%. Wait, say that again?
Over 800%. Yeah, it's a massive number.
Yeah.
And it just screams that this diversification, it's not some side project. It's absolutely core to where they're heading.
Right. That's not gradual change, that's transformation territory. What's driving that kind of jump?
It's almost entirely down to the Echo Lake acquisition. Remember they bought Echo Lake Foods?
Yeah. Frozen breakfast items, right?
Exactly. Omelets, scrambles, French toast sticks, that kind of thing. Well, Echo Lake contributed $70.5 million of that $83.9 million in prepared food sales this quarter.
So basically the entire segment's growth is that acquisition kicking in.
Pretty much. And management mentioned it's actually running ahead of their initial expectations already.
That's a good sign. So they're taking the basic egg and turning it into something stable, branded on the grocery shelf.
Precisely. Moving up the value chain away from pure commodity.
And if you put those two together, specialty eggs and prepared foods.
Together, they now account for nearly 40% of Cal-Maine's total net sales.
Almost 40%. Okay, that really does show the portfolio mix is changing. That should smooth things out over time, theoretically.
That's the whole thesis, right? Can this shift dampen that historical stock price volatility tied to conventional egg prices?
So the strategy seems to be working on the revenue side. What about costs? Can they keep margins strong?
Good question. They talked a lot about operational excellence, vertical integration, the usual pillars. They want to be the low-cost producer.
Did they have any help on the cost side this quarter?
They did get a bit of a tailwind. Feed costs were down about 4% year over year per dozen eggs. Mostly cheaper soybean meal.
Then what does that translate to in dollars?
Roughly $6 million in savings on cost of sales, they estimated. It all adds up when you're dealing with their kind of volume.
Sure, every penny counts. Are they investing in more production?
Oh, yeah. They're clearly betting on growth. They cited some big capacity increases. Breeder flocks up 46%, chicks hatched up 77%, average layer hens up 10%.
Wow, those are big numbers, so they're ramping up significantly.
Seems like it. Supporting both conventional demand and this growing specialty side.
And in this industry, you always have to talk about biosecurity.
Absolutely.
Yeah.
Especially with HPAI, highly pathogenic avian influenza, always lurking. They mentioned they've invested over $80 million in biosecurity measures just since 2015.
$80 million. That's a huge cost, but I guess it's non-negotiable.
Completely. It's the cost of staying in the game. And it provides important context for how the market reacted.
Right. Let's talk about the stock reaction, because you had the headline miss.
Yeah, so pre-market, when those numbers hit, the stock gapped down pretty hard. About 7.5%, opened around $87.
Ouch.
But then, throughout the trading day, it clawed its way back. It actually ended up closing only down 1.2% from the previous day, around $93.
So a big initial drop, but then it stabilized significantly. What does that tell you?
It suggests that while the algorithms might have reacted to the headline miss, maybe human investors listened to the call, heard the strategy, saw the underlying strength.
And decided the long-term story was more important than one quarter's commodity-driven miss.
That seems plausible. They like the vision, even though management didn't give any specific financial guidance for next quarter or the full year.
No quantitative guidance.
Yeah.
Okay. But they laid out their priorities.
Yep. Reiterated 3 key strategic points. 1, keep expanding specialty and prepared foods. 2, use their vertical integration to stay low cost. 3, keep an eye out for disciplined M&A.
It sounds like a clear playbook focused on transforming the business profile.
Exactly. And they're putting money behind it right away. They announced they just approved $14.8 million in new capital spending.
For what specifically?
A new high-speed pancake production line.
Pancake, so more Echo Lake expansion?
Yep, at the Echo Lake facility in Burlington, Wisconsin. It directly ties back to that huge growth in prepared foods. They clearly believe in that frozen breakfast category.
Okay, so that investment signals confidence. How did they frame their overall approach to using capital?
They laid out 5 ways they think about capital allocation. First, the variable dividend we talked about. Second, opportunistic share repurchases. They explicitly called that out as a new tool in their toolkit.
Interesting. Buybacks are on the table now.
Seems so. Third, EPS growth through reinvesting in the business, like that pancake line. Fourth, disciplined M&A, like Echo Lake was. And fifth, the ultimate goal, long-term multiple expansion.
Ah, there it is. They want the stock's valuation multiple to go up.
That's the explicit aim of all this, the strategy, the transparency, the first earnings call. They want the market to value them differently.
Makes sense. Now, what about the big picture risks and opportunities? What do they highlight externally?
So the big headwind is still HPAI, avian flu. Management was clear it's still a global threat. They sounded concerned about the upcoming fall migration season.
Any recent impacts?
Yeah, they noted that 3.1 million hens had recently been taken out of the national flock count due to outbreaks. So the risk is definitely real and present.
Okay, that's the major risk. What about tailwinds? Reasons for optimism?
They highlighted some strong underlying demand drivers for eggs. 1, they're still one of the cheapest sources of high-quality protein out there, maybe second only to milk.
Always a key selling point.
Right. Plus, they mentioned regulatory nods from the FDA and the American Heart Association, now allowing eggs to carry healthy claims on packaging.
Oh, that's potentially big for marketing.
Huge. And it fits right into consumer trends favoring clean labels, high protein, less processed foods. Eggs tick all those boxes.
So putting this all together, strong quarter operationally, messy headline miss, clear strategic pivot, ongoing HPAI risk, but strong demand trends. How might someone think about this from a trading perspective?
Okay, and this is where we absolutely have to say,
Yeah.
this is not financial advice. We're just talking hypotheticals based on the narrative.
Got it. Purely hypothetical discussion. So what's a plausible idea here?
Well, you've got this company with a super strong balance sheet, right?
Mm.
$252 million in cash, another $1 billion in investments, basically no debt.
Rock solid financially.
And they're making this aggressive pivot from a volatile commodity business toward a more stable CPG model. But the stock price is still largely reflecting that old commodity volatility.
Like we saw with the reaction to the earnings miss this quarter.
Exactly. So if you believe management can actually pull off this transformation long term, there could be a relative value play.
Okay, lay it out for us.
The idea could be something like this. Go long, common stock. You're betting that over time, the market will recognize the shift and re-rate the stock higher, maybe closer to valuations you see for other consumer staples companies, like those in the XLP ETF.
Right, betting on that multiple expansion they talked about.
But you also need to acknowledge the HPAI risk and the commodity swings that can whack the stock around unpredictably, even if the strategy is working.
So how do you handle that risk?
You can simultaneously short a basket of related commodity futures, maybe egg futures, maybe broader poultry futures. The idea is to hedge out some of that specific commodity price volatility.
Interesting. So you're long the company's transformation, short the commodity noise.
Kind of. You're trying to isolate the company-specific execution while neutralizing some of the external shocks that have historically dragged the stock down, regardless of their internal progress.
The bet is really that management successfully closes that gap between their current valuation and a true CPG multiple.
Precisely. It hinges entirely on them executing that Echo Lake integration, continuing the specialty growth, and proving that 800% prepared foods jump wasn't just a one-off.
Okay, that's a fascinating, though definitely complex idea. So wrapping this all up, what's the key takeaway from this deep dive into Cal-Maine's quarter?
I think it's that financially it was a record Q1 for them, despite the headline miss. That miss was really driven by the old story commodity volatility.
But the new story, the prepared foods platform, driven by Echo Lake, and the growing specialty segment that seems to be working really well.
Yeah, undeniably well so far. The core strategy seems clear.
Yeah.
Shift the business mix towards these higher margin, more predictable categories.
And the end game, as management stated pretty clearly, is that this shift should lead to better returns and, crucially, a higher valuation for the stock.
Right. Which leaves us with the final thought for you, the listener.
Yeah.
Management explicitly said this earnings call, this increased transparency, it's all aimed at driving multiple expansion.
So the question is, if they keep executing on this pivot, keep growing prepared foods, will the market finally start to ignore the ups and downs of conventional egg prices?
And actually begin valuing Cal-Maine like the stable consumer staples brand they aspire to be. That's what we'll be watching in the quarters ahead.